Good morning, my dear students. Today in this video, I'm going to discuss the first chapter of the performance management. In the first chapter, actually, we revise some basic concepts of the management accounting, which we have already covered in the previous subject. We are going to discuss the absorption costing, marginal costing in this chapter, how it is different from each other. But in this video, I'm not going to focus on the theoretical concepts because we have already discussed this in the previous subject. Yes, I'm going to solve some illustrations given here in this chapter. I'm going to solve this by using the MS Excel. Okay, so why costing is important? Of course, we want to know about the cost of the product, and we can then price our product in the market accordingly. In traditional method, we have the absorption costing method and the marginal costing method. I'm going to jump directly to the exercises given in this chapter. Okay, let's suppose start from the this exercise. There is a company called K Limited which makes two products. Information regarding one of those products is given below. Okay, although the company is making two different products, but this information is only relevant to the one product. Before starting this exercise, let me revise. Okay, let me revise. Remind you people that my dear, whenever we talk about the cost of the product, we actually have three different components which are directly or indirectly involved in the production of the product. One is the direct material, one is the direct labor cost. The third one is the overhead. The first two, direct material and direct labor. Let me make it like this and zoom it for you people. Okay. The first two, direct material and direct labor. These are the material costs which are directly involved in the production of the product. Plus, these two are the variable cost. The more product you produce, more material you need. More product you produce, more labor wages you are supposed to pay. The third one, overhead, is actually indirect cost involved in the production of the product. Here, the first two, this is the direct cost, and these two are the variable cost also. But the overhead is the indirect cost. Now the question arises either this is the variable or this is the fixed cost. In overhead expense, my dear, we have two categories. Some of the portion of the overhead cost is variable cost, while some of the portion of the overhead cost is fixed cost. Okay, for example, if you are paying a rent, rent is a fixed cost. You are paying rent for a building. Okay, variable cost means, for example, if you are paying any utility charges. So some of the overhead costs are fixed and some of the overhead costs are variable. But one thing is clear that this is the indirect cost. Now, my dear, let's come to the exercise. Okay. So there's a company K Limited. It makes two products, but the information is regarding only one product. We are going to do this budgeting for how many products. The budgeted output sales for the year is 900 units. I'm going to enter the data to make it less time consuming. I have already written information which are required. So 900 outputs the units which are expected. Okay. Now the other information is given that standard details for 1 unit. These are the expected cost given for the 1 unit. Very clearly mentioned. Direct material. Okay. One thing more, whenever you are calculating the cost of the direct material or direct labor, it's simple. You just need to, for example, if you are producing more products, you just need to multiply the quantity of the material you are using and the cost of that material of the 1 unit. If you multiply it, you will get the direct total direct cost, material cost. Same is the case with the labor. Mostly labor rates are based on the number of hours because the labor work for the more it work, the more hour it works, the more you are supposed to pay them. If you are following the absorption costing method, either you are following the ABC costing method, either you are following the marginal costing method. For all of these, these costing methods, direct material and direct labor are same. The only technical thing or the different thing is we need to understand the overhead cost. Like for example, in marginal costing, you only consider the variable cost. So these two are variable plus portion of the overhead which is variable. You have to consider only that. In absorption costing, we consider all of this. Okay. So only the technical thing which you need to understand for the different approach is the overhead cost. The rest these two are same similar for the any kind of method you are using for the cost of the product. Now let's come again to the question. So direct material information is given for 1 unit. It is 40 square meters at the rate of 5.3 per square meter. So the quantity is how much? 40 square. And how much they charge for 1 square meter? It is 40. So simply you need to multiply 40 by the $5.3. 40 is the quantity, 5.3 is the per square rate. Okay. Now, my dear, now to calculate the direct labor cost or the direct wages is given here. Actually, we have two different departments. One is the bonding department and one is the finishing department. In the bonding department, to produce 1 unit, we require 24 hours. For 1 hour, we actually pay the 5. So 24 multiplied by 5, we will get the answer. Similarly, in the finishing department, it requires 15 hours at the rate of 4.80 per hour. So bonding department 24 and finishing department require 15 hours. Bonding department, how much they charge us in the bonding department? The labor is going to charge us $5 for bonding department, and for finishing they charge us 4.8. 5 and 4.8. Okay, number of hours are here 15. Now, my dear, as I told you that in the overhead cost, okay, now in the overhead cost we have two portions. You can see this information is regarding the variable overheads, while this one is the fixed production overheads, and this one is the fixed non-production overheads. So first, let me discuss the variable overheads. $1.5 is charged in bonding department for 1 hour. Okay, and we charge the labor charge 1 point, so $1, sorry, for the finishing department. Now those labor who are working in the bonding department charge $1.5 for 1 hour. How much hours are consumed here? How much hours is required for one product? It is 24. So 24 multiplied by 1.5 is the variable overhead cost for the bonding department, and $1 is charged in the finishing department. So finishing department required 15 hours. So 15 multiplied by 1, the answer is 15. So 15 is your variable overhead for this particular product in the finishing department. Let me charge it here. 24 hours are required. How much they will charge? 1.5. In finishing department we have 15 hours. And how much they will charge it? we charge it 1. I'm just entering the data and then we will going to solve this question. So fixed production overhead is 36,000. You keep this thing in mind that this 36,000 fixed production, fixed cost has nothing to do with the variable number of for the number of one unit. Actually, this is the 36,000 for the whole 900 units. This is also fixed cost, which is 27,000. Again, this is fixed for the 900 units. Either you produce 900 units or 500 units, it doesn't matter. This is the fixed cost. But one thing you should make it clear that this is the production overhead and this is the non-production overhead. Like for example, if you are paying a salary to the marketing people are the part of the overhead cost, which is fixed also. For example, if you are paying them salary, but marketing people are not directly part of the production. That's why this is called a non-production overhead. So we have two categories here in this question of the fixed production cost. One is the directly production cost and one is the non-production cost. So 36,000 and 27,000. Fixed production overheads are 36,000 and this one is 27,000. But again, my dear, this is for the entire 900. This is not cost for the one unit. So come to the question, what are the requirements? The first requirement is to calculate the prime cost using the standard cost card for one unit and enter onto the standard cost card the following subtotals are required. The very first one is the prime cost. Idea prime cost means the direct cost. Here if you see that I told you that these two are the direct cost involved in the product. So prime cost is equal to direct material cost plus the direct labor cost. Once we find out the direct material cost and then we find out the direct labor cost, we simply add it and the answer which we get, that is the prime cost, or we can say that total fixed cost. Sorry, total direct cost. Now let's calculate the direct material cost. For 1 meter they will charge 5.3. So for 40 they will charge. The total is 212. In direct wages, labor we have two different departments. For 1 hour they will charge 5. 24 hours are required for 1 unit. So simply multiply 24 by the 5. We got the burning department cost of the direct labor. Finishing department, 15 hours they used to consume to produce 1 unit and they charge 4.8 for 1 unit. Now the total finished cost for the total wages is 72. Again I'm repeating it, prime cost means the total direct cost. You can see that three different costs are involved, but the first two are only direct, the second one is the indirect, so we need to add up this one. So direct material cost is given here, it is 212 and plus the direct labor cost. So the answer is 404. 1 unit prime cost is 404. Come to the second requirement. The second requirement is that calculate the variable production cost. Now, my dear, what I told you that these are the three components. You can see that these two are variable. In overhead, some portion is variable while some portion is the fixed. So there, in the question, the second requirement is they were asking only to calculate the variable cost, so we are not considering the fixed cost. In this question, we have two kind of the fixed cost. One is the production fixed overhead and one is the non-production, but we are not concerned with that in this requirement. We are only considering the first two, which we already calculated, that is the prime cost, but we need to add the variable cost of the overhead. Okay, you can see that variable overhead bonding department charge $1.5 for 1 hour and bonding department take 24 hours. So 24 hours they take to produce 1 unit. So the variable overhead of the bonding department is $36. For the second one is the 15 now charge. For 1 hour we have the information that they'll charge $1. Now this is my dear the variable overhead. If I add it both, my total variable overhead is 51. Okay. No, I need to add up all these three. 1, 2, 3. We have already added this two in the for the prime cost. If you can see here, we have already added it. Okay, so we need to add this two also to calculate the variable cost per unit. This is 404 plus 36 plus 50. So this is the second requirement. We need to calculate the variable cost per unit. This is the prime cost or the direct cost, which is also variable, but this portion of variable was missing. But this is the total variable cost of the product. Now my dear, come to the requirement number third. The third requirement, they were asking the total production cost. They were asking for the total production cost. I told you that this one is the part of the production cost. This one is also the production cost. In overhead, this one is also the production cost. In fixed cost, in this question actually we have the two different categories. One is the production overhead and another one is the non non-production overhead. They were asking only for the production cost per unit. So now we are going to add this portion also. These are also production cost variable, and now we are going to calculate the total production cost. If I am going to calculate the total cost, then I have to add it also. Means the marketing salaries will be also calculated and incorporated into the cost of the product. But now we are only considering the production cost. So these are the four now production costs. So we have already calculated plus added all this. Now we need to calculate the production overhead cost of the 1 unit. Okay. In question it is given that the production fixed overhead is 36,000. This 36,000 is for how many units? This is for the 900 units. So my fixed production overhead is the 40. Now the question is that I am supposed to calculate the total production cost. Either this is variable or this is fixed. We are calculating the total. Now we have already calculated. You can do it again by adding this 3, but we have already added here. So 455, which is the summation of this plus the variable also. Okay. We are adding the fixed production also. Now my dear, this is the fixed production cost. Okay. But we also need to calculate. Now let's check the fourth requirement where we are supposed to calculate the total cost. This is the fixed production cost per unit, and we can say that the total production cost per unit, which is 495. Now let's check the fourth requirement. The fourth requirement is calculate the total cost. Now my dear, we are supposed to calculate the total cost, so we are going to add this last one also. We are not, now there is no question regarding the production or variable or fixed. The question is that calculate the total. So in total, my dear, we have this one, the fixed non-production cost, which is 27,000, but this is for the 900 products. We request to calculate here for 1 unit. So 27,000 divided by 900. Now this is the fixed non-production cost. Now we need to calculate the total one. So 445 we have already calculated. We did calculate the total production cost. Yes, this one 455 plus 40. This is the total production cost per unit, and this is the fixed non-production cost. So add these two together. 525. Now we have added all this yellow color cost, and the answer is 525. Hopefully you get it. Okay. As I told you, the purpose of calculating cost is to fix your selling price while adjusting the profit margin also. Now the question, requirement number B, is to calculate the selling price per unit, allowing for a profit of 25% of the selling price. Means that you have to calculate a selling price in a way that you can earn 25% profit in that. So we know the cost of the product. So we have to adjust the selling price in a way that if we sell this product on that price, we will be earning a 25% profit also. Okay. Now, how to do it? There are different methods to calculate the selling price. I do it like this, that if already you have the fixed cost, which is the 525. Now, my dear, here they were asking us to make a 25% margin here. So simply, if I found out of 100%, if I minus the 25%, so the answer is 75%. If I simply divide this fixed cost on the 75%, I will get the value of that cost. Like normally I do like this, 100% minus what is the profit margin? That is the 25%. Okay. So if you divide 525 by 75%, or even I can say that I can write like this also. Instead of 75%, I can simply write 0.75. So I will get the value of the selling price, which include 25% margin also. So let me calculate it. 525 divided by 0.75. Now the answer is 700. Okay. 700 actually means that this is a selling price where I'm earning 25% margin on the 525. So now the question here is that calculate the selling price for one unit, allowing a profit of 25% of the selling price. So we have already defined it. If you want to check what is the profit is sell price minus the cost of the unit. You are earning $175 in each unit. This is actually the 25% of the 25% margin on the 520. Hopefully you get it. Theoretical portion, my dear, you can read it by yourself. This question is regarding the budgeting. It's not regarding the absorption costing or okay. Now let's solve one of the question. Okay, by using the absorption costing. Absorption costing is actually a traditional method. It was used earlier, even today. If the size of the business is small, or let's suppose the production is less complex, production is less complex. Sometime only maybe, for example, if I talk about the cafe with only few items available, Okay, what we do in the absorption costing? In absorption costing, actually, we divide the, again, there is no issue with this too. I told you that if you are using the absorption, marginal, maybe, or activity-based costing method, you have nothing to do with this, but this overhead. And this overhead, actually, if you are using the absorption costing, what we do, we consider all all this cost and we divide it sometime equally on the basis of the number of units. For example, if I give you the example of I'm paying the rent of a room, and that is for example 6,000. Okay, and we are number of students living in this room are for example let's suppose 4. Now when I divide, for example, if I'm using the absorption costing, what I do, I simply divide this 6,000 amount by the 4 students. So per student, I have to pay how much rent? In the beginning, the size of the companies or even the number of production of items or number of departments were very few. So people mostly used to divide it sometimes by equal number of units. Even in the still we some people who are doing the small level of business today even they use this method. I'm not going to discuss this one in detail because once I'm shifting from absorption to the activity based costing then I will discuss it comparatively. And in comparison then it will be more easy for the people to understand. Let's come to the question. Okay, there is a company, Saturn, a chocolate manufacturing company which produced 3 different products. The name of the products is the Sky Bar, the moon egg, and the sun bar. These are the 3 different products produced by this country. As I told you, my dear, there are 3 components of the production involved in the production of the units: direct material, direct labor, and overhead. Again, you can see that direct labor cost for the 1 unit. This is given for the 1 unit. For Sky Bar, it is 0.07. For Moon egg, it is 0.14. Let me put this data into the MS Excel. Direct material cost per unit for the Sky Bar is 0.07. For Moon egg, the direct material cost for 1 unit is 0.14 and 0.12 for 1 unit. This is the direct labor cost per unit. Direct material cost is 0.17, 0.19, 0.16. This is for the 1 unit. And how much actual productions units are sold out? 500,000, 150,000, 50,000. The direct labor hours per unit. How much labor hours are consumed for 1 hour? 0.001. Okay, 0.01, 0.005. Direct machine hours 0.01, 0.04, 0.02. Selling price is 0.5, 0.45, 0.43. Now the annual production overhead is 80,000. So my dear, this is the annual production overhead. As I give you the example that, for example, this was my overhead in previous example, which is 6,000. But this is overall. If you are calculating the cost of the 1 student, so then we need to divide it by 4 because here, how, if you want to calculate the per unit cost, in this case we actually call it overhead absorption rate. What does this mean? This means that calculate the cost per unit of the overhead. Look, if you see the question, we have the direct material cost for 1 unit, which is 0.17. For direct labor cost in the sky bar, it is 0.07. It's clearly mentioned. But in overhead, it's not mentioned. They have given it all 80,000. Why? Because if you're paying the rent and salaries, etc., this kind of expenses, which collectively is equal to 80,000, we need to divide this 80,000 by the by by the by the per unit cost. How much this 80,000 belongs to sky, how much this 80,000 belong to moon, and how much this 80,000 belong to the sun. One thing. The second thing is that this 80,000 is for how many units? This is not for 1 unit. This is for this we have produced 50,000, 500,000 of the sky bar. We produce 1,50,000 and we produce 2,50,000 in this sun bar. By producing this much units, the total cost of our overheads are 80,000. So we need to calculate the per unit cost of the each unit, but that is the overhead cost. So that is called the overhead absorption rate, OAR, overhead absorption rate. The formula for this is that we are supposed to calculate the overhead cost and divide it. You can see this was the overhead cost. We divide it by the number of students. Here we are supposed to divide it by the activity level. What do we mean by the activity level? In this question, the activity level were students because this rent was charged for a whole room, but there were four students. So we are dividing this rent among the four students. So our activity level was 4 in this case, which was the number of students. Here, my dear, in this particular question, we have to identify the activity level. We already have this overhead cost. What is the overhead cost in this question? It is already given 80,000 in total. But we don't know what is the our activity level. Well, it depends. Maybe it's sometimes you divide it by the even number of units. Okay. But here in this question, what is the question? Okay. Okay. No, our activity level could be direct labor hours or it could be direct machine hours. There are some criticism on this, which we are going to cover into the ABC. But at the moment, we have two different activity level which we can target, and we can make it a standard to calculate the expected cost per unit of the overhead. So we have here two options, either to go for the labor hours per unit or go for the machine hours. Okay, my dear, if it is clearly given in the question, then you can simply consider that particular information as an activity level. But here it is not given. So then, my dear, if you see this data, these products are more machine sensitive. If you can see that the labor hours required for 1 unit are 0.001, while machine 0.01. 0.04. So we can see that this value is greater than this one. So we are considering our machine hours, we are considering it as an activity level. By this way, we will calculate the per unit cost of each product, but which cost? Overhead cost. Material and labor we already have. So the annual production overheads are 80,000 is given. Okay. Now come to the activity level. So we are considering a machine as an activity level. So we need to calculate now here, if I come to here this question, so I need to calculate the number of hours number of hours, but based on what? Based on the machine. Okay, so how much hours are consumed in total? It's 80,000. Then divide this by the total, we will get the per unit absorption rate. Like for example, it takes zero point 0.0 hours, 0.01 hours for 1 unit. And how many units we have produced in this Sky bar? We produced 500,000 units. So it takes 5,000 hours to produce these 500,000. More like 50,000. Okay. The machine hours per unit is 0.04. And how much units we produce? 1,50,000. So these are the total hours consumed by the moon. And for 1 hour, for 1 minute, sorry, it takes zero point 0.0 hours. Multiply this by 250. So the total hours, if I add it up, it is 5 plus 6, 11 plus 5, 16,000 hours are our total, or the total number of hours. Okay. Now I can write like this, that 80,000. Look, this is the total number of hours. Like here you can see, we divide 6,000 direct on total number of students. What we get? We get the per student cost. So from here we will get the, let me calculate the overhead absorption rate. Overhead absorption rate is 80,000 divided by 16,000. Answer is $5. $5. Okay. Now we can calculate the per unit cost. We have now information that for 1 hour, if you see this one, the denominator here is 1. 1 present the 1 hour. For 1 hour, okay, the denominator is number of hours. So for 1 hour, absorption overhead rate is the $5. Okay, $5. Okay, let me write first the direct labor cost. It is already given here. For 1 unit, it is 0.07. Simply I'm copying it here. For sun bar, it is 0.12. What is the direct material cost of 1 unit? 0.7. For second one, it is 0.19. And for the third one, it is the 0.16. Now I need to calculate the production overhead per unit. Okay, this is the, for 1 hour, it is the $5. So 5 is for 1 hour. So equal 5 is for 1 hour. How much hours it takes for 1 unit? 0.01. I'm doing it again. $5 is for 1 hour. Now I have to distribute among these 3 units. Sky bar required how much hours to produce 1 unit? It requires 0.01. And for 1 hour we charge $5 as an as an overhead absorption rate. So $5 multiplied by the 0.01 hours. You can see it is 0. For the second one, for 1 hour the charge is $5, and how much hours required for 1 unit of the machine? 0.4. Similarly, again, this is the overhead absorption rate for 1 hour, and sun bar required how much hours in a machine it takes for 1 unit? 0.02. Now we have calculated the direct material cost, direct labor cost, and overhead absorption cost for each unit. Now we can calculate the total cost per unit. Simply add up this all, you will get the cost of the production of each unit. I add it up. Now my dear, if you check the requirement, what is the requirement? Okay, the requirement is that using traditional absorption costing, calculate the full production cost which we have calculated for per unit and the profit per unit also of the each product. So for the profit, we need to have the sale price. We have calculated the cost. What is the sale price of the sky bar? It is 0.5. What is the sale price of the moon? It is 0.45, and for the sun bar it is 0.43. Now my dear, we can calculate the profit. What is the formula for profit? Sell price for 1 unit minus the total cost for 1 unit. So we are earning $0.21, or I can say 21 cents, by selling the sky bar unit. If I check the moon, in moon the sell price is 4.5 while the cost is high. So we are in loss here. 0.45 minus the cost. So we are losing $0.08 by selling each unit. Here the selling price is 0.38 and minus 0.38. So our profit per unit in this case is $0.05. Okay. Now let's come to the another example. Okay, we're going to discuss the under and over absorption also. But let me first focus only on the. Okay, now my dear, marginal costing. In marginal costing, if you are using this method, to calculate the cost of the production per unit while using the marginal costing method, we only consider the variable cost of the product. Variable cost of the production. Okay. We do not ignore the fixed cost, but we consider fixed cost as a part of the accounting year cost. We deduct it from to find out the net profit, but we do not consider it into the production cost. Like for example, if I'm paying rent in advance for 3 years, why producing a product in this year is responsible for the 3 year rent? Okay, so in the marginal costing method, we only use the variable cost in the production cost. So it means that I told you that these are the production cost. You can see these are the three components. Let me start it from the next page. Now you can see that the direct material is variable cost, so this is a part of the marginal cost. Direct labor is variable cost, it is part of the marginal costing or the part of the production cost. In overhead, we do not consider the fixed cost into the production cost. We only consider the variable cost involved in the producing of the product. Okay, so the rest it is same. For again, I'm saying that for this one, if you are using absorption costing method or if either you are using the marginal costing method, the answer and the process is same. But the question arises when you come to the overhead cost. In overhead, my dear, in this case, we only consider the variable, we do not consider the fixed cost. Okay, now let's come to the question. The question is that a company manufactures only one product called XY, they're producing 1 unit. The following information relates to the product. The sale price of the 1 unit is 20, direct material cost for the 1 unit is 6, direct labor cost for the 1 unit is the 2. So direct material and direct labor are the variable cost. Variable overhead cost per unit is 4. Okay. The fixed cost for the time period is 25,000. Okay. This 25,000 cost will be considered to find out the profit and loss, but not considered a part of the cost of the product. Okay. So if the they'll say that what is the requirement? The requirement is that complete the following detail. Okay, if the company produce 2,500 units, what will be its revenue, variable cost, total contribution, and the profit and loss? Similarly, if they have produced 5,000 units and 10,000 units, what will be its profit So let me do it quickly. I need the information. What is the selling price? It is 20. What is the material cost per unit? 6. Direct labor cost is 2. And the variable overhead is 4. Fixed cost is 25,000. You can see here that this fixed cost is okay. In marginal costing method, we do it sales minus cost of goods sold, which is only the variable cost. We call this, the answer is the total contribution. Total contribution means contribution margin. Contribution margin means sales minus variable cost. I cannot call this one the profit. Why? The reason is that I am not considering the fixed cost. I am only considering the variable cost. If I want to calculate the profit, I want to calculate the, then I have to of course consider the fixed cost also. Okay. So when I'm talking about the contribution margin, it's not a fixed the net profit. It's only the margin of the sale price and the variable cost. Okay. So let's come to this question. Level of activity. If we produce, I have to calculate it for the 2500 units, 5000 units, 7500 units, and 10,000 units. What will be the revenue if I am producing 2500 units? What is the sale price? 25 multiplied by 20. My revenue is 50,000. And if I'm selling 50,000, 5,000 units, so this is my, if I'm selling 7,500 units, I'm not using the dollar sign for a shortcut to make it more simple for everyone. So revenue, number of units multiplied by sale price, this is my total revenue. Okay. What is the variable cost? For 1 unit, it cost me 6. Direct material is variable cost, direct labor is variable cost, and variable overhead. These three are the variable cost. I can add it up. Let me do it here first. Variable cost per unit is how much? 6 plus 2 plus variable only over variable overhead portion of the cost, that is, so my total variable cost is 12. Now if I am producing 22,500 units, so how much for 1 unit? My variable cost is 12, so this is my total variable cost. If you want to calculate the total contribution now, sale price minus variable cost, this is 20,000. If you want to calculate it for the 1 unit, then 20 for 1 unit, the sale price is 20, material cost is 6, direct labor cost is 2, and overhead is 4, which means 12. 20 minus 12, the answer is 8. This is my contribution margin. Even if you multiply this 25 by this 8, you will again get the 20,000. Okay. So what is the fixed cost? It is 25,000. What is the profit? Now sales minus variable cost, we already have the contribution. So now this minus this one. In the first case, if we sell out the 2500 units, we are in loss. Okay. Now let me make it fixed to save some time. If I put a dollar sign here, I'm going to fix the variable cost. Okay. So you can see that if I produce 5000 units, for 1 unit my variable cost is 12. 50. Similarly, total contribution is how much? 100,000 minus 60,000, 40,000 is my contribution. Fixed case remains fixed for it doesn't have to do anything with the number of production or units. So it is again 25,000. What is my profit and loss? 40 minus 25, I mean 15,000. Okay. Similarly, this is the variable cost of this. In this case, this is the variable cost. In this case, fixed cost is again 2,500. So 25,000, and the profit is so this is the total profit based on the 2,500 units, 5,000 units, and similarly. Contribution per unit, I have already calculated it is 8, but if still you want to find out total contribution is 20,000 for how many units? 450 for 2,500 units. The answer is 8 in all the cases. Why? Because the more number of units if you produce, your variable cost is increasing at the same rate, while the sale price is also constant. The sale, if these prices are same, the constant, so the more the number of units you are selling out, the sale and cost of variable costs are increasing on the same portion. Yes, but if you are selling more units or producing more units, it will automatically help you in reducing the cost. Okay, if the cost price change, then maybe you will be having a different contribution per unit. But if the sale price and variable cost also if they would change but at same rate, for example, the sale price change at 10%, the variable cost also change by 10%. Again, you will be having the same contribution per unit. Okay, check the profit per unit. Now it will be different because fixed cost remains same for the 2,500 unit also and for the 5,000 unit also. So the profit per unit is that profit divided by number of units. It is 2 minus 2 in 1 unit. But you can see that now the profit is increasing. Okay, because why you are in profit here if your contribution margin is